Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Our sponsor Blue Guardian is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
Hey, what's going on, guys? This is Brinks Trades coming to you live with another breakdown, a week of breakdowns. How's everybody doing? Got about 16 people live. What's up? Shout out Hugo. What's going on, Hugo? What's going on? Jeanette. Hey, Jeanette. How's it going? Tony. Good morning. Let's see who else we got on here. We got about 25 people on the call. So you guys know the drill by now. If this is your first time here, I am Brinks Trades, the resident indices analyst for Trading Nut Podcast. And so, I've been day trading, about a decade. It'll be a decade in March. Hey, shout out to Ada. Hey, how's it going, Ada? Tony said, I murdered SPX 500 last week. I definitely appreciate you. No problem. We're going to get into the charts. Last week was interesting. If you guys actually traded with me live, I think it was like Tuesday, I actually took a loss publicly. It's on my YouTube channel. Small loss on the Apex accounts. I think it was like a $300 loss. And then I turned it around pretty much through Wednesday and Thursday sessions. I had really good sessions that weren't live, but we can go ahead and get into it. If you guys are in my Telegram, I'll probably drop like an update to the chat. Basically, I think we ended up with around a $7,000 week. I'm trying to think. I think that was about the number. When I lost last week after the call, I stopped trading all the accounts together and I just kind of focused on trading on one individual account. Usually when I take a loss, my main priority is to kind of like get my psychology right again. And so I need to see a win, which can be very dangerous, right? As a trader, it can be very dangerous if you just need to win. But, usually it's kind of like playing sports for me. Like, if you're having an off shooting day, playing basketball, you just get a couple layups in, right? To kind of make it, get something close to the basket is what they always say. So I usually try to get a small win to kind of get my confidence back, but then also kind of emotionally get me back on track too. So I'm not just trying to overtrade just to get, make the money back that I lost or win. So I ended up kind of stopped trading all the accounts together and then just focused on 2 accounts, which are my Apex accounts. The one that you guys watched me build like 10,000 over or 9,000 over. I made 800 on that, and then the other one, I put 6,000 on a 250K live account. So a total of about $7,000. I think technically, probably maybe a little bit less than that if you factor in the losses too. So let's say somewhere between a $6,000 to $7,000 week last week or this past week. So pretty cool. Hopefully Apex pays me. Shout out to Apex. Hopefully we can get paid for those when the time comes. But yeah, so let's see who else here. Puerto Rico in the house. Shout out to is it Cilindro 23? Leo says, hey, bro, what's going on, Leo? So I want to switch things up today. And while we're waiting for some more people to hop on, I'm sure more people will jump on. I want to walk through the Forex factory just because I don't really do this a lot. So I want to make sure that I kind of cover this because this is obviously another big moment that we needed to kind of pay attention to when we're planning out our trading week, right? So what I like to do is just go through, and I'm really just looking for any red folder news for the US dollar, specifically because I'm trading indices, right? So, and sometimes I dabble in the Euro futures. Like one of the trades that I took last week or this past week was a Euro futures trade, which is basically the futures version of Euro USD. So it's the same thing, but really just the futures version. So I like to look for really anything that's going to affect the dollar, right? So as we go through next week, we have some red folder news on Tuesday, right? Nothing that I wouldn't necessarily stay away from the market from. Maybe I won't be in the market when that news folder hits, but nothing that would stop me from trading that day. FOMC is on Wednesday. So this is going to be an FOMC week for me. If you guys are one of my students, you know that I only really look to trade Monday, Tuesday, and Wednesday during FOMC weeks. And then I'm out usually because of that reason, because the volatility in the market tends to consolidate. The closer you get to FOMC, the more stagnant the markets get. So usually you'll see a lot of price action on that Monday, Tuesday, and then Wednesday up till noon, and then you'll see FOMC hit. And so depending on what the effects are with FOMC, it could be a very relatively calm rest of the week, or it could be a very volatile rest of the week. So I try not to trade after that. So I'll most likely be trying to get all of my trading done by Wednesday. Kenny says, what's up from Orlando? What's going on, Kenny? And if you guys are not following me on Instagram or to the Telegram, I'll drop the link for that. But you can find me at Brinks Trades on all social platforms. So type in at Brinks Trades on all social media platforms. But then you also can find me in the Telegram chat. And I'll drop a link to that in a second, just so you guys have that. Oops, let me get the info. Boom. So let me drop that in there. Oops. Share link. I think that should be it. Try that again. Let me see if that works. I don't think that works. That did not work. What's going on with my link? That's weird. Yeah, I don't know why it's not working. But if you guys are in the Telegram chat, if you guys, if anybody could drop a link to my Telegram chat in here, should be able to share it. But yeah, I don't know why that's not working. But anyway, follow me on Brinks Trades, at Brinks Trades on all social media, Instagram, YouTube. I try to go live at least a couple times a week. I might try and go live depending on my schedule, Monday or Tuesday. I might try and do that. Again, if you guys know me, you know that I do still work a full-time job in addition to trade. So for me personally, it just kind of helps me trade a little bit better knowing that I don't have to worry about the money that I'm making from the markets, right? It allows me to be more aggressive. It allows me to be more kind of peace of mind because I don't necessarily have to rely on my trading income to win. So I know not everybody's in that situation, and that's totally understandable. But if you are, don't necessarily feel like you have to throw your job away, right? Just because you start being profitable with trading. Eventually I will leave though. Yeah. And I'm trying to gear up for eventually doing this full time. So, but let me go to TradingView. I know that's why everybody's here. So let's go ahead and get into the charts. If you guys have any questions about trading at all, feel free to jump in the chat and throw them in there too. So go ahead and get up dollar, pull it up. And I might break down Euro futures as well too, just because, which is going to be basically the same thing as Euro USD. But it's been the chart that I've been trading a lot. So let me pause this real quick. I'll take you guys through. Well, actually, you know what? If you guys are in the Telegram, I'll drop some screenshots from the account, the TradeZilla account, that kind of shows the progress for this past week. So stay tuned for that. But let's go to dollar. So this is the wrong chart. So really at this level, we look at dollar and what we've been doing over the past few weeks. We're really in this hugely consolidated area. If we look at kind of like the overarching monthly time frame, we've really traded into this old imbalance here. If I get rid of this and bring it back, you guys can see that we really came up to this level, almost tapped consequent encroachment. And this is the monthly time frame. So this is basically the overarching time frame. And we've really just been consolidating here. And so we're looking really to see what's going to happen next. We technically haven't really broken structure on the monthly. So long-term trend, we don't really have that as of yet. We're really just consolidating. My students, my students have talked. I've talked to you guys, a lot about the concept of equilibrium, right? And that's basically where we're at right now. So in the long term, it's kind of hard to tell where we're going to go. Break this down to the weekly, the same thing. We've really just been consolidating. So it's really anybody's game at this point. So when you're trading on these weekly timeframes or these daily timeframes, and you don't necessarily have a great indication of price action and where it's going to go, these are not the situations of the trades, the trading situations where you're going to hold trades a long time or swing trade things for a long period of time. Usually my confidence from swing trading and holding trades comes from a higher time frame bias. And we can see last week that we really took out this old short-term low there. I'm still going to say that we're going to, for the time being, we don't have any signs of bullishness in the market. So we kind of have to rock with this idea of bearishness still. And so coming into last week, I think this was last Friday, I wanted to see the market really come down and take out this low on the way to our long-term target, which is down here. Might not get this low, but I do have some preliminary targets that I'm looking at. This low here at 103.164, right? 102.80, and then 101.96, let's call it, as the final level. So we've really been consolidating underneath this fair value gap for a while, right? So there's also a small gap up here. So I'm just gonna cover that up as well. So if you see a volume imbalance, again, my students know gaps in the market and what we look for. But there's also a secondary kind of volume imbalance. So that's why I'm going to make this a little bit bigger than a normal gap is. Or I guess you would call this that new day opening gap. So that concept that we talked about this week for my students. So again, I want to see something like this kind of happen. Would love to see something like that on dollar this week. We don't really have a sign for a long-term bullish move. So that's we kind of have to stick with this bearish idea until we get that, at least in the daily time frame or the weekly time frame. So that's what I want to see, is the market really take out these specific lows, this low here, this low here, this low here, and those are going to be at 103.119, then 102.84, and then 101.92. So that's what I'm looking for dollar. Let's go to Nasdaq really quickly. So Nasdaq was the tricky one, right? So if anybody traded Nasdaq this week, you could have set yourself up for a loss. I took a loss, like I said, and to start the week off. But usually, like I said, there's a rule that I have with my students on how to predict the bias for the week and how to know if you're wrong for the bias for the week. And so ideally, what we wanted to see was the market. The market technically hadn't fully broken structure in the daily to a confident level that I was confident with seeing. We did take out the short-term low there, so you could have called that. But I wanted to see a few things play out. I wanted to say for us to stay above consequent encroachment. I also wanted us to stay above the top end of this old, I think this is a weekly fair value gap. And then ideally, what I wanted to see play out last week was the market running to this level. And this would have been kind of like our key level to see if we're going to keep going higher, keep going lower. And so we did respect this level here. We did respect the 19,096 level. And coming into, I think, like Tuesday, I think. Yeah, I thought I saw this and I saw us reject here. And I thought, we probably could be potentially going up. And we did not. So we closed. I think this is when I took the loss. And the next day, I just completely took a loss. I'm sorry. Completely was off on my bias. I didn't take a loss that day. But going into Thursday and Friday, I was kind of able to readjust with what the trend is saying. And so there's a rule that I have with my students about, when you kind of call it a week or you need to shift your bias for the week and what day that usually kind of falls on. And so this was a prime example of that. So I'm sure on our call tomorrow, guys, I'm going to kind of go in more depth with that. So where we're at currently is we have firmly broken market structure. This was kind of like a soft short-term low, and this was kind of like our fail-safe for the week. So once we fully had taken out that level, the strong move, really at this point, we're looking to just kind of see what we can do. And so at this point, there's a couple of things. So as we're about to go into a new month, I want to start in the monthly time frame and just kind of give you guys a better look at what we're seeing. So again, I was looking at this yesterday for all of my students. You know exactly what level we're sitting at. It looks like equilibrium. So looking at the weekly time frame, a couple things here. We tapped into this old order block. And so I think it was like Thursday, right? We were trading well below here, and I thought we were probably going to close above that. So a couple things here. We're respecting this order block currently on the weekly. So this could just be a short-term weekly trend fake out to continue to go higher, right? A liquidity grab to go higher. And then, or, we could keep going down. And so again, this is 90, I'd say like 85% of the time when I trade, I have a pure direction that in the market that I'm like, okay, cool. This is what I want to see hit. This is what I want to see taken out. This is my targets, right? And usually if you guys go back and look at all the videos, that's usually where I'm at. In these situations where I can see multiple things playing out, you have to be very cautious and very careful. This is not ideal trading. Ideal trading is you having a trend or you have some type of target you can aim for, and you kind of aim for that for the week or the daily or whatever. And so in this situation, I'm going to be looking at a few things. Right now on the daily, we are bearish. So what I would like to see happen on this time frame is something like this. Like that, right? And at least to this low, is what I'll be looking for. I won't be looking longer than that, because we're getting conflicting messages on both time frames, right? So we're looking at the daily, we're looking at the weekly. So to this low, back into this range, I think we could retest consequent encroachment of this old weekly fair value gap, kind of turning this into a potential inverted fair value gap. So I'm just going to make the note here. Right. So retesting that zone and then kind of falling over, at least back to this low. So I probably will even say like from to here. But early next week will kind of tell us where we're at, because there's also a world where we can go up and keep going up. And so how we respect kind of two levels, this 19,648 level and this 19,892 level, are really going to give us the clue on what we should be expecting for the week. Again, these are not trading situations and set and scenarios where you're going to go all in. You're not. Like, this is not a good time to go all in. And obviously, again, this is not trading advice. This is just the way that I see the market and for like educational purposes only. But this is not a go all in type of situation, because I can just as easily as I can see this going bearish, right? Broken market structure, rejection from this gap, keep going down. I can also see the market not respecting this and keep going back up, because look at the monthly, we tapped into a fair value gap with an order block going higher, right? So that like I can see both of those things potentially playing out. And so if you can see conflicting things on conflicting higher time frames, then you need to be very cautious in how you trade. Very, very key setups, very, very short-term setups. But ideally, the way that I'm seeing this is that I would like to see the market run for this high, like early in the week, and then continue to run at least for this gap again, maybe potentially this low, right? And once it gets here, kind of have to sit back and let the higher time frame stuff play out, right? And so this is going to be kind of like a multiple week thing. We're also going into the month of August this week, which is going to be a very, very slow time in the markets. It's traditionally my dead month. So all my students know that I did not trade the month of August at all. I sat back and I just kind of waited. And also, I think I was also teaching during that time too. So I did not really take a lot of trades. So it might be like that again. It might not. I'm going to feel it out the first couple weeks or first couple weeks or so of the month to see what's going on, and then kind of make a decision from there, right? So ideally though, this is what I want to see is the market kind of retrace back into this range. Also looking at the monthly time frame, this has been a bearish month, right? We pretty much have been July has been bearish. So I would not be surprised if we retrace back into the range. I don't think we would continue to make new lows going into the last week of the month. So that's also something that you kind of have to be wary of, like how a candlestick forms. So going into that last week of the month, we ran up high, we started up high, then we completely crashed. So I would imagine that we would probably end the month retracing back into the range, right? And then next month, we'll kind of, the beginning phases of next week and the following weeks will kind of let us know where we need to be at. Yep. So TGI Friday. So that is your counter trend setup on Friday. So that is very, it's very critical. That plays out very frequently in the market, especially if you're trading at that lower end of the range. And that was basically what Friday was a retracement back into the range. So all the counter trend traders, pretty much ate that day. I stopped myself from going into the market that day. I was like, I'm not going to do this because even though it started rough, I ended up with a pretty good week. So I was like, why am I trying to go back in the market? So shout out to EDL. He said, big up from Florida, bro. Keep going. Appreciate you, man. Appreciate you. So that's what I'm looking for Nasdaq. So I want to see how we react coming back into this range. And if we even stay above this range, right? I mean, because this is technically a second imbalance here. So we could just fall over, start the week, go higher, tap this high, and then continue to fall over. So if we never make it here, then that's even a more sign that bearishness might probably play in. But I'd like to see this. I'd like to see us come back into this range, maybe tap this high and this old overlapping imbalance here. Right. Which pretty much those consequent encroachments pretty much overlap. So I would not be surprised if we ran up in here. But if we if we are struggling to get through this high, we could see an issue with bullishness. Like I said, I'd like to, if you put a gun to my head and say bearishness or bullishness, I would like to be bearish. Because even if obviously this is the Nasdaq, eventually we will turn around and go back up again. But I think that this order block right here is kind of very key for how we're going to keep moving. Because if we take this out, I mean, we're looking at an 18,000, a low of 18,432, and before that we're crashing to 17,000. We're also in an election year, so like traditionally the market rises. So I'm not too concerned with the market like to continue to dip, but if it did dip, that would be very telling. So okay, cool. That's Nasdaq. Let's go to S&P, and I think S&P actually had the best, clearest example of what we were trying to see. And to be honest, sometimes I get tunnel vision. That's kind of my fault as a trader, and to be honest, a person. Like my girlfriend will tell you, like, man. But let me see. She will tell you that. But yeah, let's look at Nasdaq. Really quickly. And so, oops, this is Dow Jones. Why is Dow Jones in here? That's all US500. Where's mine? That's weird. Why are all my S&Ps out of place? This is weird. Okay, so anyway, there was a couple things that we wanted to see on Nasdaq that played out. So really, and this kind of lends this idea to the idea that we might continue to go higher next week. So again, I only trade Nasdaq, but I look at all these charts for stuff like this, right? So looking at this gap right here, there's a few things. So obviously we came down, we took out structure. And so the hardest thing to know in the markets, if you're trading as a trader, just looking at pure technicals, is did we break structure because we are breaking structure to go down, or did we break structure because we're just grabbing liquidity and continuing to go higher? And so one thing that kind of helped me look at that, and obviously it's not perfect, is just understanding where liquidity is at under the potential break of structure. So I think looking at this level here, again, we see the market really kind of running for lows, this old imbalance here. And if we go down to the daily time frame, that yellow box is a opening gap between, I think, this low and this high. So the market really ran straight for that. It really needed to come in, fill in that gap and get that liquidity, and then obviously close above the CE of that level, right? So it's looking pretty good. Now, what we want to know is, again, was this a gap that's going to take us, was this a break structure for liquidity and we're going to continue to run up, right? Or was it a break in market structure and we're going to continue to go down, right? That's the two questions that we kind of have to ask ourselves. And so looking at the weekly time frame, I'm inclined to say that it was a liquidity grab. Also looking here, but seeing here, we also could dig a little bit deeper into this. So again, it's one of those situations where if you will know very early next week whether you're right or wrong in the bias. But what I would like to see here play out is us running for this high, trading back into this range here, and then from here looking for probably a rejection from this level at some point. And so just like on Nasdaq, the key level here is going to be the consequent encroachment of this gap and the upper end of this gap. So really, if we fail to respect these, then this will be my ultimate bullish target. And we're back in line with the bullish trend. But if we come to this gap and we find like maybe a couple of days of stuttering in here and the market's really having a hard time breaking through, then we could see the market, kind of just fall over and keep going lower because technically broken market structure. So we'll know very early in the week, but ideally, I'm bullish to this gap, and then I'm evaluating once we hit here to see what's going on. Jumping down to the 4-hour. Again, another thing, and this is also on Nasdaq too, is that I need to see some type of break of structure, right? So if we're looking at like key levels, could trade back into that. But if we're looking at key levels, I need to see this 4-hour structure break, right? It's kind of hard to buy into a trend, a daily trend that doesn't have a 4-hour kind of break in that direction. So I also will be looking to see like what happens here. If we are consistently running for highs on this 4-hour and we take out some key levels like this high right here, then there's a very good chance that we could continue to just turn around and go higher. So I'm going to be looking at all those things. But again, breaks of structure on our like middle time frames, like that 4-hour, that 1 hour, it's going to be kind of crucial to letting us know whether this is a liquidity grab, or we're going to continue to go down. So be ready for anything. Again, these are not trading setups. The hardest thing about trading, again, is there's a lot of hard things. Everything about trading is hard. So, but there's a lot of things when it comes to trading that you have to be prepared for. And I think this is kind of where some of my students are at right now. I think they are starting to recognize what the good setups are, but they're still getting better at recognizing what the bad setups are and how to stay away from those. And I think that's kind of the work that we have to do with some of them. So I think one of the things you have to recognize is that these trading conditions are not ideal, because if you can call both sides of the market, if you can see a world where we can go bearish, but you also can see a world based on this weekly, right, where we can continue to go bullish, then this is not high probability trading. So this is conservative trading. This is taking a moderate, your usual risk reward ratio, risk reward position, or maybe a little bit less, right? You're not trying to go all in on the markets and kind of kill them, at least initially, right? Until you kind of figure out the daily trend or the 4 hour trend, like that type of thing for the day. So once you figure that out, then it kind of lets you play that a little bit more. But initially, when you're hopping in your initial position for the day, you can't go all in on any particular trade. So that's something that kind of comes with time and experience. And it's one of the reasons why day trading is not an overnight thing, right? Like anybody that told you they got rich off day trading in a year, they're lying to you. Or they got lucky and they don't even know they got lucky yet. And they're probably not going to be around next year. So yeah, so again, I'm looking at a few levels on S&P. Boom, that consequent encroachment, also that order block is sitting there too. So I think that's kind of a very solid level to see what's going to happen. So earlier in the week, this Monday, maybe Tuesday, we should probably have a good idea of where we're at in the week. Dow Jones, let's look at the Jones. All right, so Dow Jones also kind of gave a little bit better signal as far as what we're doing here. And this also might lend itself to the idea of bullishness. So we came back into this weekly range. We took out this high. And one of the things that I called out is I wanted to see how the market reacted to this level right here. And for my students, we'll get there eventually. I got a lot of tricks that I still got to show you guys. You guys have been learning from me from a year, my personal students, but hey, you guys, some of you guys are getting good, but there's still a lot more I can teach you. So we came down to this level here. We took out this all-time high. We came back down to this zone here, respected it pretty much on the nose, and then we took off again, respected CE of that level as well, and then continued to take things a little bit higher. So we also broke structure here again too. So going on this 4-hour structure, we took this out. So this might actually be kind of like the cracking correlation that I always talk about, or like finding that one that kind of gives you the best idea of what's going to happen for the next week. And that could be this, right? So looking at what it's about, I think this could be a good sign that we're going to continue to go bullish. We got that 4-hour break that we didn't necessarily get on the other two. So we'll see. But this is all information that I'm taking in for next week. So again, ideally, looking at this one alone, I mean, we could see the market really wanting to run higher. So I'm looking at like something like this, right? To continue to take out these highs and then run for obviously this all time. Well, this fair value gap right there. That's kind of my target for this week. If we get higher, cool. But this is right here is where I'll be aiming for. And that starts at 40,902 and then runs to 41,009. 41,096. So we'll see. But ideally still bullish on Dow Jones. Add to these comments. If you guys have any questions at all, feel free to throw them in there and let me know. Real quick, I want to look at Euro futures because that's another one that I've kind of been talking about. So Euro futures is pretty much synonymous with Euro USD. So if you're trading Euro USD, then it's going to look the same. So weekly time frame. Again, I was bullish on Euro. I wanted to see the market really come back down and find a reason to go higher. If we look at the daily time frame as well, we know the higher time frame weekly is just all consolidation. This is all chop, right? If you look at this on the weekly and the monthly, that's all you're seeing is just chop back and forth. We're at a state of a higher time frame equilibrium, and that's why. So breaking this down to the 4-hour, we are we really kind of failed to respect. Actually, I'm sorry. We came back up into this old gap here and really rejected it about 3 times. The close on this daily candle also fell short of consequent encroachment. So we could be heading back down. Ideally, if this lines up with dollar, then we would want to see that. We'd want to see because pretty much these are going to do the opposite of each other. That's how they're correlated. So ideally, we'd want to see this. If this is playing out on dollar, then we're going to want to see the opposite happen on Euro futures. So we would want to find a reason for bullishness. I don't see that. I actually see more cause for bearishness. So I might not trade. I might not look at trading this all week. But also, yeah, I see a lot of reasons why we could go bearish. Here, let me go to Euro USD. Yeah, same thing. So yeah, that's kind of where we're sitting at. Let me go to GBP. But this is all kind of just chop. I don't really see. Yeah, I don't really see anything. So another thing is knowing how to discern when your chart is going to give you trouble that week, right? Like if you can't paint a clear picture as to where you think the market's going to go this week, you probably don't need to be in the markets. If you can't do it at the higher time frames, then it's just going to confuse you at the lower time frames. So if you can't see it that day, then just call it a day or call it a week. These markets will be around, right? Like for me, my July has been relatively quiet. I think I requested a payout about a week or so ago from Apex. And then I think before this week, I hadn't really done too much. I think if I look at TradeZilla, I think it was probably I've taken a few trades for a couple, maybe $2,000 or $3,000, maybe something like that. So I hadn't really done too much until this past week, right? So sometimes you're going to have these big days and big weeks, but you're not going to get them every week. It's not going to be an every week thing. So the more you try to treat this like a job, like you're trying to pump money out on a regular basis, the more you're going to blow your account. Like it's just that simple. It's like be ready when the opportunity is there, take it, get done, go watch the rest of the week. If you can get 1 to 2 good winning trades a week out of 5 days, it doesn't mean the first trade you're going to take is a winner. It doesn't mean like it's going to be on the charts all week, right? But like it might take that. So your goal is just to walk away with maybe 1 or 2 wins in a week. That's it. That's it. Just 1 or 2 winning trades and let your account grow. And that doesn't mean 1 or 2 winning, blow your account if you lose type of trades, right? We're not gambling. You're going to lose. You're going to lose a lot. You're going to lose a lot. But if you manage your account correctly, right, you can see your account grow over time potentially. Skippo said, only trader I see use SMT is futures traders. That's not necessarily true, man. So I know some traders that like they trade futures and they use, so SMT is really just a Kraken correlation, right? So, oh, I guess smart money trading, is that what I think you're talking about, like SMT divergence, I think is what you're talking about. So I think that might be the cause, but I think, are you talking about SMT divergence, or are you just talking about smart money trading in general? Let me answer that first. Can you trade NQ just by itself without ES? Yeah, I can. So I use ES without looking. Like most of the time I'm not looking at ES, right? But I'm just getting a better sense of like what these markets are all correlated, right? So like, again, I talked about this before. The top 30 stocks are in the top 100 stocks, and the top 100 stocks are in the top 500 stocks. So these markets are all correlated. So like, I do most of my analysis with this at the beginning of the week. So I don't actually take positions or take trades on these accounts on S&P or Dow Jones most of the time. So I don't really need to look at it. I just use it as a kind of like a second opinion on what the markets could do. And some days you don't even need to. So, yeah. So let me see if there's any other questions here. If not, I'll go ahead and end the chat a little bit early. So if you guys have any questions at all, I was thinking about trading US30 and NQ alone. You can do that, man. You don't need, like, I break down all three for the people that want to trade. Look at all three. I'm looking at Skippo's here, comment here. You can break down all three and just trade one. I don't trade all three of these. I literally only trade Nasdaq. All of my positions, all of my trades are Nasdaq. I very rarely trade anything else. The Euro futures was a rare one. The Nasdaq, I don't ever trade US30. I tried for a second, I think, when Q banks at first started switching to US30. That's why every trader started switching to US30. Even if you don't realize it, your trader, the person you learn from, whoever, kind of came back to him, and he's the reason why everybody started trading US30. I tried it for like a week and I was like, I'm good. And it's not me. So I don't even trade US30. I don't trade S&P most of the time. I would say if you're going to trade, if you want to get introduction to futures, trade US 500 or the S&P. It's the easiest one. It's the slowest one. It's kind of like the AUD of indices. So I agree with that analysis. I definitely think this week should be observed and let the week play out. 100%. And so the thing about trading is that in a normal week, maybe not an FOMC week, your trading is going to be, your best setups are usually going to be towards the later half of the week, like that Wednesday, Thursday, and maybe even Friday. Like, you know where the trend is going to go by the end of the week most of the time. So if you're on, you're going to be on. If you're wrong, you're going to be off. You're going to know very quickly into that week. And if I usually by Wednesday, if the trend is not heading your way by Wednesday, you're going to know very quickly. And that's kind of like my signals, like when I'm done for the week or I'm pivoting my bias for the week, is usually going to be on that Wednesday. So yeah, so that's all I got as far as info for you guys today. I'm going to break this or stop this stream. If you guys have any other questions, feel free to hit me on Telegram or hit me on any of the other things. All right. So it's been cool. Peace. I'll talk to you guys next week, and I will catch you next week. All right. Thanks.